All right, for principles of business, business finance, we're looking at financial records for sole traders. All right, we're looking at the reasons a sole trader needs financial records, and some of these reasons are for personal record keeping, for tax record purpose, and for the lenders. So for the personal record keeping, it's to know the level of profit that they are making, and for tax, to find out how much you need to pay the government, and for lenders, so that the bank or the investors can know if they are able to. Now the books kept of financial transactions are purchases ledger, the sales ledger, and the general ledger. Now the purchases ledger would be looking at purchases made, which would include money spent on purchasing items such as raw materials. For the sales ledger, it would be sales of finished goods to consumers and other buyers. The general ledger would look at other financial transactions such as purchase of fixtures and fittings, machinery or equipment for a business operation, as well as the payment for rents and rates, as well as wages, along with other similar. Now, the bookkeeping system that is used by the sole trader it could be the single entry system or the double entry system. Now, the system represents an organized way of keeping the financial records of a business, and this can be conducted using a single entry system or a system. Now, the single entry system, as you can see by the picture, is that it involves making a single entry when a transaction is made. Right? For example, as you'll see, the starting balance for the week with $5,000, and then that's April 1 and April 2 inventory purchases of $147.27. So all those are just one entry. Now for the double entry, it would have been different, right? Double entry in bookkeeping, all transactions are entered twice. So you have a debit entry and a credit entry. So for example, cash is used for paying for the truck. Then you have cash debit $12,500 and truck $12,500 for credit, right? The single versus the double entry system. The single entry entries are made for cash transactions only, and it's used by small and simple businesses, right? For double entry, both credit and cash transactions are entered, and there's a twofold aspect of the transactions as shown in the bookkeeping records, and it's usually used by larger businesses. Right? Purposes of basic financial statements. Now, the income statement or the profit and loss statement, it gives information which helps the business to calculate the level of profit being made by the business. And the information can be put together in an income statement or what you would call a profit and loss statement. Right? To identify the difference between revenue and cost, you could also use the financial statement, which would show the profit that has been earned. The Oxford text on page 286 would assist students. Now, this is just a sample of a single step income statement, and that can be, you can pause the video at some point and examine this sample. Now, the statement of cash flow. This statement deals with the movement of cash in and out of a business. This is different from the profit and loss statement. And the statement of cash flow, the profit is shown in the income statement, right? And the statement of cash flow shows the movement of cash over a period of time. And there are three main types or parts of the cash flow. Cash from operating activities and cash from investment activities, as well as cash from financing activities, and all of that would be shown, right? So for the operating activities, money that is used to buy new stock or received from making sales would be in that part. And for investment activities, investment in new plants and machinery, which would show an outflow of cash, or sale of a part of a company's land, which would be shown as an inflow of cash, because if you sold the land, then it's going to be cash received for the sale. Cash from financing activities, there are non-current liabilities such as sales of shares, which would result in inflow of cash, and dividend payments, which would result in outflow. This is a sample of a cash flow statement, And of course, you can pause the video and examine it and view it for your. But now we can look at the purposes of cash flow statements. Some of the purposes are to focus purely on cash movement in and out of the business during a particular moment in time or a period in time, right? You can use the cash flow statement to identify whether the business is building up or running down its cash reserves. And the same way we talk about cash reserves in the central bank, being kept by the central bank for the commercial banks, we're saying that businesses need to have their own cash reserves. All right, that additional fund, that just in case money. The cash flow statement shows the net movement of cash in a specific period of time, that is cash in versus cash out. It itemizes the various movements of cash under the three key headings. And the three key headings would have been the operations, the investing activities, and the financing activities for different types of cash flows. And now what you're going to do, in order to test whether or not you have learned, you would look at the activity which would show, which you could answer to indicate how might an income statement be of use to someone who has bought shares in a particular company. And the next question is, how might a statement of cash flow be of use to someone who is considering lending a business a large sum of money? And the final question is, what would a sole trader be able to find out from studying the statement of financial position for their own business? And that's the end of it. I'll see you next time, or share another video with you at another time.